You, sitting at a desk with a laptop, calculator, maybe some tax forms in the background. Camera slowly zooms in or cuts between angles. Script. Hey everyone. Welcome back to the channel. If you're new here, I'm a professional accountant. And today I'm going to talk about a topic that everyone is curious about. How to legally pay less tax. Let me ask you something. Do you ever look at your paycheck and wonder where all your money went? Or maybe you filed your taxes before and felt like you paid way too much, but didn't know what to do about it? You're not alone. Every year, millions of people overpay on their taxes simply because they don't know what options they have. And the truth is, you don't need to be rich or a financial expert to pay less tax. You just need to know the right strategies. That's what this video is all about. I'm going to break down some of the most effective, legal, and smart ways that everyday people, just like you, can reduce their tax bill. These are not loopholes or shady tricks. These are real, government-approved strategies that most people simply overlook. I've helped hundreds of clients, from freelancers and small business owners to salaried employees, keep more of their money by applying these tips. And now I'm going to share them with you, so you can do the same. Whether you're a student, a part-time worker, full-time employee, or running your own business, you'll definitely learn something in this video that could save you money. Here's the best part. Most of these strategies are simple to understand and easy to apply once you know what to look for. So make sure you watch till the end, because I'm going to give you not only the top ways to pay less tax, but also a bonus tip at the end that even many accountants forget to mention. If you find this kind of content helpful, don't forget to like the video, subscribe to the channel, and turn on notifications so you never miss an update. I post regularly with practical financial advice to help you grow your wealth and protect your income. All right, let's jump into the first strategy. And trust me, you're going to want to take notes on this one. All right, let's start with one of the most powerful ways to reduce your tax bill, and that is by maximizing your deductions. A tax deduction lowers your taxable income, which means you're taxed on a smaller amount. The lower your taxable income, the less you owe. Pretty simple, right? But here's the problem. Most people either don't know what deductions they're eligible for, or they don't keep track of their expenses throughout the year. That's like leaving free money on the table. So let me give you a few common deductions that you should definitely know about. If you're self-employed, working freelance, or running a small business, you can deduct business-related expenses, like office supplies, internet bills, software, marketing costs, and even a portion of your rent or home utility bills if you work from home. You can also deduct mileage if you use your personal vehicle for business purposes. Just make sure you keep a log. The IRS loves documentation. For employees, if your employer doesn't reimburse certain job-related expenses, like professional subscriptions, tools, or training, some of those costs might still be deductible, under specific conditions. Students, don't worry, there are deductions for you too. You may be able to deduct interest paid on student loans or even education-related expenses. And don't forget about medical expenses. If your medical costs exceed a certain percentage of your income, you may be eligible for a deduction there as well. Here's a quick tip. Start keeping receipts and records now. Use an app or spreadsheet, whatever works best for you. But don't rely on memory during tax season. Remember, deductions aren't just for business owners or high earners. They're for anyone who's willing to stay organized and plan ahead. Coming up next, I'll explain something even more valuable than deductions, and that's tax credits, which directly reduce the amount of tax you owe. Stick around, you don't want to miss this. Now let's talk about something even better than deductions, and that is tax credits. While deductions reduce your taxable income, tax credits reduce your actual tax bill. Dollar for dollar. That means if you owe $1,000 in taxes and you have a $1,000 tax credit, your tax bill becomes zero. Sounds amazing, right? That's because it is. And yet, so many people either don't claim the credits they're eligible for, or they don't even know they exist. So let me walk you through some of the most powerful and commonly available tax credits you should know about. Child tax credit. If you're a parent, this one's for you. The child tax credit gives you money back for each qualifying child under a certain age, and depending on your income, part of this credit may even be refundable, meaning you could receive it even if you owe no taxes. Earned Income Tax Credit, EITC. This credit is designed for low to moderate income earners, especially those with children. It can be worth hundreds or even thousands of dollars, depending on your income and family size. Education credits. Are you paying for college or any post-secondary education? There are two main credits to know about. The American Opportunity Credit, worth up to $2,500 per eligible student. The Lifetime Learning Credit, up to $2,000 per year for education-related expenses. These can significantly reduce your tax bill if you're a student or paying for a dependent's education. Energy-efficient home and vehicle credits. If you've recently bought an electric vehicle, installed solar panels, or upgraded to energy-efficient appliances or HVAC systems, you may qualify for various clean energy credits. These not only save you on taxes but also lower your utility bills over time. Savers credit, contributing to a retirement account like a 401k or IRA. You might be eligible for the Savers credit, a credit that literally rewards you for saving for your future. The bottom line is this: credits are gold. They are one of the most effective tools for reducing your overall tax burden. But to benefit from them, you have to know they exist, understand the rules, and keep good records. Also, some credits are refundable, meaning you can receive a refund even if you don't owe taxes. Others are non-refundable, which means they reduce your bill but can't take it below zero. So be sure to check the eligibility criteria for each credit. Or, better yet, talk to a tax professional to make sure you're not leaving money behind. Coming up in the next section, I'll show you how investing smartly and using retirement accounts can lower your taxes while helping you build long-term wealth. You won't want to miss it. It's a strategy I wish more people understood earlier. Now, let's talk about a smart, long-term strategy to reduce your taxes. And that's by investing through retirement accounts. When you contribute to tax-advantaged accounts like a 401k or IRA, you're not just saving for the future, you're also reducing your taxable income today. For example, if you earn $50,000 a year and you contribute $5,000 to a traditional 401k, the government only taxes you on $45,000. That means less income tax right now. There's also the Roth IRA, which doesn't give you a tax break today, but allows your investments to grow completely tax-free. And you won't pay any tax when you withdraw that money in retirement. And here's the best part: the money you invest grows over time, and if you hold it long enough, you'll likely pay lower capital gains taxes instead of higher income taxes. These accounts are legal, easy to set up, and designed to help you keep more of your money. So remember, don't just work hard for your money. Let your money work hard for you while reducing your taxes. Now, let's talk about a smart, long-term strategy to reduce your taxes. And that's by investing through retirement accounts. When you contribute to tax-advantaged accounts like a 401k or IRA, you're not just saving for the future, you're also reducing your taxable income today. For example, if you earn $50,000 a year and you contribute $5,000 to a traditional 401k, the government only taxes you on $45,000. That means less income tax right now. There's also the Roth IRA, which doesn't give you a tax break today, but allows your investments to grow completely tax-free. And you won't pay any tax when you withdraw that money in retirement. And here's the best part. The money you invest grows over time, and if you hold it long enough, you'll likely pay lower capital gains taxes instead of higher income taxes. These accounts are legal, easy to set up, and designed to help you keep more of your money. So remember, don't just work hard for your money. Let your money work hard for you while reducing your taxes.